A lot of people talk about Bitcoin being a hedge against inflation. There's nothing to prove that that is the case. In fact, it's the exact opposite. Hello and welcome to the Faster Freedom Show. My name is Sam, and we are going to talk today about inflation and how it is an amazing wealth building tool, while most people think it is something that just affects groceries and cars and shoes that they want to buy. It doesn't really do that. All inflation does is lower what money can do. So inflation is the reason kind of that I went into debt. You can complain about it or you can use it. And that's exactly what I'm doing. So inflation is simply when the value of money goes down, which means everything that you buy with money goes up. That's why things get more expensive. Things don't get more expensive because they get more expensive. Things get more expensive because the value of money goes down. I mean, that's why $100 could get you pretty far 50 years ago, pretty far 20 years ago, but today $100 isn't going to get you very far. I just went to Wendy's with one of my team members, and we each, or actually was, I just actually went to Lion's Choice. So if you're not from St. Louis, you wouldn't know where that is, but Lion's Choice is like a Arby's roast beef place, fast food. The two of us got a meal. It had a soda, fries, and a roast beef sandwich, and the total was like $29 for the two of us. So the point is, inflation is real and it's not going anywhere. The two effects of inflation, again, are cost of goods and services rise and the purchasing power decreases. And real estate is one of the few assets that goes up with inflation. A lot of people talk about Bitcoin being a hedge against inflation. There's nothing to prove that that is the case. In fact, it's the exact opposite. Now, I am actually a crypto bro, or I'm not a crypto bro. I like crypto. I wouldn't call myself a crypto bro. But the point is, everybody, the crypto bros, you hear them saying crypto is a hedge against inflation. It's not, because I'm recording this on the 14th of August. Bitcoin just went at an all-time high. It was pumping. It was going like crazy. All the other coins were moving with it. And then inflation got announced this morning, and Bitcoin dropped like 3% in like 10 minutes, and so all the other coins followed. So Bitcoin is not a hedge against inflation, at least not currently. In the future, maybe it could be, but right now, the current cycle and season we're in of Bitcoin, it is not. So real estate is the hedge against inflation because it is an asset, and it is something that goes up in value while the purchasing power goes down. So as the price goes up in real estate, as the costs go up in real estate, the replacement of that goes up. Therefore, if you own it, you get that raise. Like, let me explain that a little bit better. So my $200,000 house that I own is going to be worth $400,000 in 15 years. It's going to double in value in 15 years because of inflation. Because what does inflation do? Inflation makes lumber more expensive. Inflation makes concrete more expensive. Inflation mainly makes labor more expensive. So somebody that builds a house in the general vicinity of my house that I own that's worth $200,000, in 10 years, if they build that house, it's going to cost them $300,000 or $400,000 to build that house. So because everything costs way more when they build it than it costs right now. Therefore, my house, my asset, just gets brought along for the ride. That's why death, taxes, and real estate goes up in value and doubles in value every 15 years are the guarantees in life. Like anything else, it's cyclical, okay? Real estate may go down a little bit in value, real estate, over a short period of time, but over a long period of time, unless the asset deteriorates because it got hit by a tornado or you don't maintain it, it's going to go up in value. So the reason I started this off with debt is the reason, or inflation is kind of the reason why I get into debt, is because I understand that assets go up in value. Everybody knows that it's real estate specifically is tied to inflation, so real estate is going to go up in value. So you need to own assets, specifically own real estate. And if you're going to own real estate and you don't have money to own it, you're either not going to create wealth or you are going to borrow money to create wealth. So what you can do is you can borrow money, this thing that goes down in value because of inflation, to buy something, real estate, that goes up in value because of inflation. So you're borrowing a dying fiat, a dying currency, dollar is the strongest in the world by not even a little margin, but it still goes down in value. So you're borrowing a dying currency to buy something that's going to create wealth for you, and you not only get the value increase, you get the debt pay down, you get cash flow, and you get tax savings. So the best thing to do is to understand that inflation is going to affect you on the consumer side, but on the investing side, inflation is a good thing if you're investing in assets. That's the key. Invest in assets, specifically real estate. You can use the cash flow for your consumer issues that happen with inflation, and then you're going to create wealth that way. So borrow money, buy assets. Inflation will take care of the value growth. The tenant rent will take care of the debt. You'll get cash flow and tax savings all in one, and it's a beautiful thing. It's the simplest way that I can explain to you how wealth is created through real estate with a kickstart from inflation. So if you enjoyed this at all, share this, like this. This episode is brought to you by Faster Freedom Capital. We are now doing 30-year DSCR loans in the mid 5%, and we can do a fix and flip loan in 10% or less. So if you're interested in funding for your project, short-term or long-term, go to fasterfreedomcapital.com, and I will see you on the next one.